Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking back in on the MJ sector. A little bit of fundamental news where we have the provinces wanting a delay on the legalization in July 2018, and then we have federal government saying no, we're going to stick to the plan. So not really seeing much effect of that in the market. I don't believe that the market is anticipating that a delay is likely at this point. It's assuming that it is unlikely. So just something to be aware of, but not really having an effect on the day-to-day charts. So checking in on WEED, it's been a little bit back and forth all week. Red, green, red, green, red, green is how we've gone. But the bulls have the upper hand right now, and that occurred when we broke this little downtrend here, this big green day back on July 17th. The last video I did gave the green light for the long-term entries for positions because I was liking the way that things were shaping up, and fortunate enough that things really took off that Monday, and that's when I initiated a position in APH, which we will cover in just a moment. But here on WEED, we have a little bit of a higher low pattern, and at this point we're just trying to build higher lows and higher highs as we make our way back to 881. That's the key resistance level. That was the high of the pre-earnings release as the price was moving up in anticipation of those earnings. Then we took a bit of a setback and formed a base of support. 773 is a must-hold level. If I were in a long position in WEED, I would exit if 773 broke, and I would re-enter a position at a different point in time because that's a key support level. We also have support of 782, and now the bulls want to form a higher low compared to 782, and they're trying to do it at the low of today, 815, but we don't have enough follow-through to be confident that that higher low has been set. So right now, key resistance as well, 845 and then 881. So those are the key supports. Those are the key resistances. Bulls have the upper hand in the short term. Weekly time frame, still not there yet in terms of strength. We have our low, high of the bounce, higher low, but we don't have the higher high until we break 881. That's why that resistance is so key. If we do break that level, we will have a bullish MACD cross, and we will see the bulls get back over the middle Bollinger Band weekly resistance and turn all weekly moving averages back into support. So that 881 level is the level to be watching for the rest of the summer, really. And the sooner that we take that out, the better positioning the bulls will be in for progress moving forward. So APH inside bar was a beautiful setup to head into this past week. I made an entry right at the open on Monday. As soon as we broke 583, that was my green light. I got into APH QF, which is the US version, and was anticipating a long-term entry, looking to hold it for a year plus. But I have commitment issues, and if you give me 12% in 2 days, I'm going to take that every single time. So I did sell the second day in. I sold this upper wick. I believe my average on APHQF exit was about 4, it's actually in the 5s, 510, which correlates to about the low 650s here. So I was really pleased with that exit, and what it does is it's going to allow me to rebuy here for a couple percent cheaper and just put in the same exact amount of money and get more shares. So planning on holding long, but if you give me that fast to move that quickly, I will be flipping and playing these pops and pullbacks because that's just what I do and I can't get away from it. So higher lows and higher highs, this is obviously still, I've been saying it for months, but this is the strongest big name licensed producer in the space, technically speaking. And this chart just shows you that, exploding to the upside. And we've come off of a 455 low, and we hit 650, so almost a 50% gain in just under 2 months. So we're now consolidating. Some people made their entry today. That's perfectly fine. It's a bullish reversal candlestick. We're back testing and holding the 100-day moving average support. Volume is declining. As we're consolidating, that's a good sign as well. Personally, I'm waiting for a break of the inside bar now. We have the exact same scenario as we did last week, where if we see a break of 627 first thing on Monday, I'm going to hop back in because that's telling me the bulls have momentum again, and we're going to be looking back up at resistance of 675. I take that back. It's 657 to see continuation of this big bull move. A red flag would be a break of 607. That's the low of this pullback at this point. So the bulls want to hold that going forward. Weekly time frame is so much stronger than WEED because we have all moving averages back as support. We have our higher low and higher high. We have a bullish TCG cross underway. We have a bullish MACD cross closing in. We have an increase in bull volume. These are all reasons that APH is stronger than WEED and stronger than any of these other names. And that's why I'm going to be only playing APH at this point. I will eventually diversify, but right now that short-term momentum is so strong, I want to capture that, and putting in all my positions in APH allowed me to do it so far successfully once, and I'm looking to do it again. ACB, beautiful break today, and this was a very clear break. As soon as 249 broke, that's your bull signal, off to the races, and we're looking for continuation here. So this is a really nice turnaround as well. It's not as strong on the weekly time frame because of the big setback we did have with dilution, but in terms of the daily chart, these higher low, higher high pattern, very strong. And with the triple top at 249, you know as soon as that level breaks, lots of traders are watching for that break, and they're going to pile in as soon as that resistance breaks. So we're up here at the high of the day. 260 is resistance, and then 265. A break of 265 will be very bullish. Look at that volume. That's very bullish volume. And we're now looking on this weekly time frame to try and change this trend. We're not going to change this trend right from here. We have a lot of resistance to work through. We're going to have to set higher lows and higher highs for that to occur. And the way that we have this momentum and the increase in bull volume and the bull MACD cross and the bull TCG cross, it's seeing all these bull signs that the bulls are here to stay now. But we know normal healthy consolidation will occur eventually, and we'll look to backtest and hold the middle Bollinger Band, form a higher low, and then see continuation to reverse the trend and put the bulls back in full control. So very strong end to the week on ACB. It was the biggest bull that I was watching in the sector today. EMC is still struggling. I don't like EMC because of the lack of support, but if the bulls can get their act together and start to get momentum like we're seeing in these other names, there is going to be some really nice gains in terms of the percentage moves to the upside. So 191 is resistance, and we're topping out at 190. So here's another play where if we break 191, that's the go signal, and there's going to be traders on top of that. This is a psychology of a cup and handle pattern with the left side of the cup as resistance. We pull back, form the cup. The right side cannot break the left side. We begin to consolidate. We form a handle, and then we see a breakout. Not saying that's what's going to happen, but the psychology of the pattern is there. This is an inside bar as well, and if we see a break of 180, that's a bull signal on Monday for a potential entry looking for that break of 191. So a trade plan setup would be, okay, I'm going to enter if we break 180. I'm going to look for a break of 191 for continuation, and I will exit if we break 171. So essentially, let's say you get in at 181 right on that break. You're risking 10 cents to the downside, which is not too bad in terms of the reward potential, whereas if we break 191, we're looking at a potential 20-cent gain from that 181 entry. So there's a nice trade opportunity here on EMC presenting itself. Same as APH. ACB, that break already happened. That was the opportunity today. But it's really nice that the correlation in these names are different a bit to the degree that we can have individual plays that we can look at each day. So ACB today, APH was last Monday. We've got EMC this coming Monday along with APH again. So we're seeing activity pick up in the sector again, which is giving that opportunity. So EMC on the weekly time frame, not strong. Big upper wick of profit taking, not convincing follow through, rejection from exponential resistance, and we've held this 200-week moving average support nicely, but this follow through is not there. So not confident on this weekly time frame yet. Perhaps if we see a close next week over these exponential resistances, that will change, but not the case right now. FIRE, we were watching this oversold bounce. We were looking for an entry right around the $1 range, and we did get it, and we got a nice oversold bounce, a quick 10%, and now it's seeing continuation to the upside, and it's ended up being 20%. So really nice short-term gains, higher low and higher high, but we're struggling at the middle Bollinger Band resistance. We have inside bars to be watching on Monday as well, multiple inside bars. So if we see a break of 116, that's the go signal, and then we'll be looking for a break of 119 and looking up at 120 and 124. So middle Bollinger Band needs to become support. You see the volume is absolutely drying up as we get tight here, and this is another one added to the list. We have a lot of trade opportunities and a lot of trade setups here for Monday. FIRE, EMC, and APH so far. Really tight ranges and inside bars looking for the signal. FIRE, bullish reversal candlestick on the weekly time frame confirmed. First solid green week we've seen since FIRE started trading here. And now, of course, that's just under the new name. But now we're looking for higher lows and higher highs to try and change this trend. HMMJ, the sector as a whole. and of course some MJ in the US sector as well. Higher lows and higher highs, and the bulls are now in control. Nice turnaround. Weekly chart got that higher high. The bullish signal was a break of 898. You could use $9 psychological if you wanted, and if that was your entry point, you just made just about 4% very quickly. So the gains are here. We're not going to see, people ask me, are we going to see the same kind of move that we saw back in November? No, in my opinion, that's gone. That's not going to happen again unless I can't even imagine the news that would make this kind of breakout happen. This was hype. This made everything. This was new. This is when the news of this sector reached the masses, and that is no longer the case. So we can have big pops, we can have 10, 20% moves, but we're not going to see multiple 100% moves. That time is done in this space, in my opinion. That doesn't mean we can't see really nice gains. Making a long-term entry and looking a year out, I had a conservative target of 50%, and we hit 12% in 2 days. So, of course, my target was very conservative. But in regards to long-term positions here, you make 12% in a year, and that's a really nice gain. And we just got it in 2 days. So there is still plenty of profits to be had in this sector. It's just not going to be money growing on trees like it was. So bulls in control. Watch those setups. These inside bars are going really well. And we're also seeing a difference in how these market makers are opening things, where we close at the high, and this is twice now. I'm looking at APH as an example. We close at the high, and normally we would look for a gap up in that scenario back in the day, and that would be a sell the gap up scenario, which played out time and time again. And this is dictated by the market makers. So when I see the market makers not gap the price up, that tells me that they're looking for a more prolonged bull move, and they're looking for some consolidation and continuation. And we've seen it twice now. Even to start this past week, we had Tuesday open lower, and then the bulls showed up, which is much healthier than opening higher and seeing profit taking. So make note of that. We are seeing differences in how the market makers are opening these stocks after really strong closes, and there's not a sell the gap up game plan like there was for the past few months, almost the past 6 months before this. So things are changing. Bulls are retaking control. Trends are changing. And we're getting ready here for 2018. I'm looking for this sector to have a good fall season, just like the USMJ sector. Keep your eyes on HMMJ due to that exposure. Thanks for tuning in, and have a great weekend.